Hello, everyone, and welcome to the Dorsey Wright Podcast. Today is Wednesday, November 27th. I'm Eric McCardle.
And I'm Will Gibson.
And the day before Thanksgiving, got anything planned, Will?
Just going to my parents' house. Going to watch the Macy's Day Parade, try to sleep in a little bit, pet the cat, all those good things.
Perfect. Get nice and fat and happy, right?
Oh, certainly.
Right.
You?
Yeah, same thing. Taking it easy and relaxing and fattening up just like the market is, right? We've seen, domestic equities move to new all-time highs on the large cap indices, and we've seen a lot of participation, all across the whole domestic landscape. So fat and happy across the board. It's going to be a great Thanksgiving for investors. So we're excited. And when we look at the market, starting with the S&P 500, again, moving to consecutive all-time highs, right? This recent rally has been, pretty sustained. I feel like we keep hitting new highs, keep advancing, right? A lot of technical strength in the picture of domestic equities, which, doesn't come as a surprise when we look at that long-term Dolly ranking, right? Where we've had leadership there for really since 2016 uninterrupted, but this recent rally has been one to behold. So, a lot of strength in the chart for SPY. We're on a third consecutive buy signal on that default chart at 310 in X's. So, looking great there. And when we move to the smaller and mid-cap names within the domestic equity landscape, is looking at the Russell 2000 ETF IWM, we see that this has recently broken out, moving to a new 52-week high for the smaller mid-cap names, right? So it's not just a rally that's reserved to the large caps. So, what are we seeing in addition to the strength? This has been somewhat of a low volatility environment. Is that right?
Yeah, certainly. So I guess starting with that low volatility point that you made at the end, I was looking at the chart of the VIX this morning because I was thinking, when I check the morning or when I come in the morning and I check the futures on the TV, it's been pretty calm.
Yeah.
And that kind of translated into the look of the VIX, where we currently have it reading 1150 on our platform, which would match the low last seen in April of this year and then previously in October of 2018. So at least an interesting observation. Volatility is low, and as you mentioned, it's on the back of an elevating market that some would consider overbought. And it's certainly an interesting time to be in the market, be an analyst here at NASDAQ Dorsey Wright. And I completely agree with the thing that you're mentioning there. And specifically when you mentioned Dolly, that made me think of the changes that we've recently seen from a sector perspective. At the beginning of the year and the middle of the year looked much different than where it looks right now, to a small degree. And what I mean by that is we've seen industrials really come on strong in the second half of this year. And we've seen that where industrials and technology are actually holding the top two spots in Dolly now from a sector view. And in fact, so industrials have honestly led the year now, up approximately 41% as a group. And then technology kind of clocking in second at 33%. And both of those will be outpacing the S&P as of today, which is up roughly 25%.
Interesting.
Yeah, and these are holding the top two spots, as we mentioned in Dolly, from a sector perspective, and it's not by a tight margin. They have pretty substantial leadership when looking at the relative strength buy signals on Dolly. Technology at 230 and industrials at 167. The next closest would be real estate, which is about 25 shy of industrials at the moment. So certainly an interesting time. And kind of, I guess, cycling back to that low volatility with elevated markets like we are now, Eric, do you have some thoughts on ways that investors could not become defensive, but at least be a bit protective, given that I'm sure Q4 of 2018 is fresh on many minds?
Yeah. Well, no, you're exactly right. And, this is a stark contrast to what we experienced last year around this time, where the market was starting to show weakness, volatility was picking up, right? And ultimately ending 2018, as you alluded to, in the red for the S&P. And, again, what a stark difference a year can make. But I think anytime you're hitting all-time highs, investors are a little bit more on edge, right? Even though we know momentum investing and buying relatively strong names or asset classes tends to do well over the long run, it can be difficult to make that kind of investment decision when you're at all-time highs. So, in addition to making sure that you're not buying into heavily overbought areas of the market, whether that be individual stocks or ETFs, you also want to maybe consider looking at ways to reduce risk exposure for the positions you already own. And one of the easiest ways that you can do that is compliant friendly is by selling covered calls, right? Obviously, it's going to be a different situation for every client and everyone's risk tolerance, but it's a generally pretty conservative strategy that essentially is going to look to limit your upside participation, with the trade-off being that you receive some premium, right? And that premium can help reduce your overall risk exposure in the form of getting cash. So a couple of ways that you can identify potential covered call opportunities using the Dorsey Wright platform are by our integration with Options Play, right? So this is a partnership where we have the Options Play tool built into the platform. You can simply click the Options Play icon above a security, or if you have a portfolio, you can then run a screen on the entire portfolio and you get a list of optimal covered call trades. So a really easy way to take that decision-making process on, what can be a little bit of an intimidating topic, right? Options are certainly, not the most basic of investment concepts, but really I think the tool does a good job of distilling it, making it easy, and then giving you a way that you can deliver it. So we did cover that just briefly in our daily equity report that's out today on Wednesday, the 27th. So check that out or give us a call at 804-320-8511 if you'd like to learn more about Options Play or just using options in your business in general. But, shifting gears a bit, Will, and we talk about integrations with the platform and new ways that we're able to add value to our subscribers' experiences. We've had some new updates this week, haven't we?
Right. Oh, yeah.
Yeah. Oh, yeah.
Many updates.
Yeah.
And they've received positive feedback overall, which we're excited about. So your thoughts are certainly welcome. Please keep sending those. We do keep them, and we do relay them to the people needing to hear it. But specifically, in addition to Options Play and all these other advancements that have come in, I guess, recent months past, we'll say, the modeler and the new models listing page has been our newest additions to the platform. And you've probably heard us harp about this on podcasts, daily equity report videos, but they are really powerful tools. And we've highlighted the modeler recently on our daily equity report, most expansive, I would say, on November 25th, which was our Monday. And then yesterday, actually, we highlighted the modeler tool. And this is a powerful, yet honestly, very simplistic way of testing out an idea for a portfolio or for an allocation. And what this does is it'll really segment your workflow into 3 stages in terms of strategy, and then your universe, and then creating the model. So you start in the strategy phase where you'll go in, give your model a name, give it a symbol, some other logistical perhaps information, and then you'll set how often you want your model to rebalance. And then furthermore, as you move through the steps, you'll be able to select a universe of funds or universe of stocks or even universe of models that we run on our platform here, and see how those would behave over time, implying that you have the ability to backtest ideas, which is powerful and honestly a rare thing to have.
Yep.
If you want to call it the power of hindsight, we could make an argument for that. But point being, it allows you to go in, input these funds, models, ideas, stocks, and see how they would have behaved. Furthermore, when you put that universe selection in and move to that creation step, It'll spit an output of performance, I believe by a calendar year basis, and then it'll also give you the option to download performance data into Excel, and then you can do some further manipulation in there and calculate some statistics in addition to the ones that are displayed on the page. And then you can save these models in the new control panel on the custom models page, and you can kind of stack these up with each other and then keep them running forward and show your clients how this strategy would have behaved.
Yeah, and the nice thing about this is, we're in the early iteration of the tool, right? So really giving you the ability to set a strategic framework, even with drifts, right? So a drift being how much we're allowing that strategic allocation to fluctuate from target before we get rebalanced back to target, right? So by using the strategic framework of the modeler and then perhaps using strategies that may be in a model format or an ETF or even a mutual fund that's got some kind of active management component, you have the ability to be tactical on the underlying, right, but strategic from the framework perspective. And I think that's really the best of both worlds, especially in an environment where, many of you have compliance or risk considerations that you have to be mindful of. But again, I think, your main point about the ability then to have hindsight and to test and see whether an idea makes sense before you commit to it, that's such a game changer. So a really nice addition. Again, we're going to be continuing to focus on this tool in the future and add, additional complementing variants to the tool. But for now, if you haven't had a chance to check it out, on the platform, it's under Models and Products, Custom Models, and you can set up your own custom models from that menu. So.
Yeah, and as Eric mentioned, these are initial iterations of our newest enhancements on the platform. So given that the modeler, when you go to where he just mentioned, you'll notice a couple gray boxes to the right of your current option for the static allocation. And these aren't available yet, but is at least to give you an idea as what is to come.
That's right.
So be a bit more dynamic, a bit more tactical when you're creating your backtest.
Exactly. So the idea being, when in the future we get, maybe some Dolly incorporation, maybe Matrix, FSM, right? So anything that we're doing on our platform to build strategies, ideally the goal is to give you those same tools. So keep an eye on that. Of course, we will keep you updated, as more developments come in, the end of 2019 and as we move into 2020. But, for now, a lot to be thankful for, right? Market's strong, a lot of great additions, great teammates here at Dorsey Wright, and great subscribers and listeners. So we appreciate you all. Hope to hear from you before the new year ends, but if not, take care. We'll talk to you soon.